This article goes on to say that there is a massive short squeeze risk for the hedge funds that are short in AMC over the next couple of weeks, and you guessed it, it's around this March 14th vote. But I think some of the things that are said in this video, hedge funds don't want you to know. So we are going to look at this article. We're going to get into some of the important points, obviously, around a short squeeze, and then we are going to get into the data here, because I don't want people to be confused about where we currently are with AMC. AMC still technically is in a bullish uptrend. Ever since you broke above that major line in which we talk about all of the time, there's a lot of hope. And really, who gives a shit about hope? Things are looking up for us in the right direction. Short interest at levels we have not seen in 2 years. Cost to borrow rates in the 300% range. Bullish on a technical basis, and a lot of uncertainty brings a lot of opportunities. So let's not be confused. Let's get educated here in this video. Hit the like button and subscribe to the channel if you like to be educated and up to date on everything that is going on with this trade. Who knows when it will happen down to a day-to-day basis, but we know the facts here. We know the short interest. We know shorts are not disclosing all of those short positions. Short interest likely a lot higher, and we know everyone in the world, investment world at least, knows about AMC, will be on to this trade when it is time, guys. So I hope you are excited. Let's get into it. It says betting on AMC stock conversion isn't as easy as traders thought. No shit, Sherlock. It's a no-brainer arbitrage trade. Pocket the $5 gap in AMC Entertainment. Propose conversion of preferred stock into common shares. However, Wall Street pros are discovering the bet is anything but easy to pull off. Quote, it's simple but not easy. It's a relatively simple dual share class conversion, but hedging it correctly and affecting its profitability is actually quite difficult. The cost of hedging the trade is exploding because it's hard to find shares of the meme stock poster child to borrow and short. To make matters worse, a recent court case against the movie theater chain's share proposal adds to uncertainties over whether its restructuring will even occur. It was supposed to be a straightforward bet. The conversion of AMC preferred units into common stock would get investor approval, and the price gap between them would vanish as ARBs captured the spread. But it isn't playing out that way, as lawsuits are potentially delaying the restructuring, and retail traders are helping to drive the common shares higher. Let's skip that next paragraph and get into the squeeze risk, because that's ultimately what we want to hear about. It says, while AMC has the green light to move ahead with the shareholder vote, it won't actually be able to implement any changes until the judge finishes weighing on injunction bid by a pension fund and other investors leading the litigation. A hearing is scheduled for April 27th. This is what I told you guys in the last video. This is what I told you in the video before that. I want to make it very clear. The vote will happen on March 14th, but nothing will happen for another month plus a week after that, at the very minimum. And April 27th, probably not going to get a definitive answer here, because I doubt this judge is going to know the whole backstory of AMC, right? What has happened to shareholders, how much dilution that we have seen, so on and so forth. There's probably going to be a period in time, I would say a month, 2, 3 months at least. You're probably talking April, May, June, July. You're probably talking July-ish before a court would rule to actually let AMC do this or not. So there's going to be a long period of time, at least based off of common sense, right? Unless, granted, let's be fair here. Unless the judge says, yeah, this has no merit, April 27th says, yeah, case dismissed, then maybe. But I'm going to assume they're going to at least hear out the plaintiff, pension funds and the investors that are essentially suing AMC. Imagine they're going to probably hear them out, and court does not go fast. So it's going to be a period of time, I would say at least until July, even if there is a yes on this, before anything ultimately happens. Let's continue on with this article. It says that means those investors who have set up their trades through stocks and options would have to hold their wagers for longer, eating into any potential profits. Quote, the lawsuit extends the timeline and increases uncertainty. Until the reorganization closes, the short squeeze risk is real. The trade, which a market strategist called an arbitrage home run, we've talked about that a couple times, implies selling AMC stock short and buying APE in hopes of covering the bet after the conversion is approved. But the straightforward strategy is dicey, in part because of the cost to borrow AMC shares is, quote, punishingly high. Wow, that was tough. According to Jones Trading, Cabot Henderson, further complicating the trade is the difficulty of even finding shares to sell short, given the meme stock's propensity to surge in a short squeeze. Retail traders have been captivated by AMC, referring to themselves as apes as they bid up shares and tout their bets on social media platforms, such as Reddit's Wall Street Bets, blah, 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 earnings. We just talked about that, right? It says, meanwhile, risk are around 25% of AMC's shares available for trading are currently sold short, according to S3 Partners data, with the fees to short the stock almost tripling this year. And then there's the volatile nature of meme stocks, whose valuations are often detached from reality. Placing a wager on a meme stock means accepting the fact that you're trading in uncharted territory. The synthetic borrow, and I think this is the second most interesting thing in this article, and then we'll kind of wrap it up for you guys because I don't want to read this whole article and make like a 25-minute long video. Not going to do that to you guys here today. Synthetic borrow. Alternatively, some traders have been utilizing options structures to borrow shares of AMC, said Chris Colpitts, director of event-driven strategies at Cohen. A so-called synthetic borrow or reverse conversion addresses the concern of borrowing stability, but the cushion only lasts until options expire. Now, given the expected delay, traders have to either roll the options packages to a longer dated expiry for an additional cost or unwind the positions. AMC's one-for-one exchange of preferred stock into common shares is part of the company's strategy to raise cash and keep the lights on. It's also proposing a 10-to-1 reverse stock split. Looking at that wide exchange spread, traders can still pocket an incredible potential return in a short amount of time, but it's probably just for those who could stomach the unruly and highly volatile turns, said this name I can't even say. It's quite perilous, he noted. There are all sorts of ways to potentially lose money. I think he said it best. But let's talk about this a little bit further because, I mean, maybe this explains some of the option activity, right? And let's read it again. A so-called synthetic borrow or reverse conversion addresses the concern of borrowing stability, but the cushion only lasts until options expire. Now, given the expected delay, traders have to either roll the options package to a longer dated expiry for an additional cost or unwind the positions. Now, why this is so interesting to me is because this is likely why you're seeing this many options for March 17th. It's because the vote was March 14th. If you went out and you bought, puts or calls, depending on how you are exactly doing this strategy, and I would imagine if you're shorting AMC and buying APE, it wouldn't hurt to get calls and puts on AMC just to hedge it out a little bit more. Maybe you would get less puts and more calls since you're already shorting AMC, right? Either way, these options are used as protection for the hedge funds to not essentially lose a lot of money. Well, now, since we know by March 17th we're not going to have an answer, we know at least until the option expiration of April 21st, we're not going to have a conclusion or resolution to this restructuring, to this conversion of AMC and APE. So ultimately, what does that mean? Well, it means that if shorts come to realize by March 17th it is not worth this arbitrage trade anymore, there's enough uncertainty, then the one might cover on their short positions, or number two, buy more options for protection. And when you're talking about months and months and months, potentially July or even later than that, before we will have an answer from a judge if this can even go through, it leads to a lot of capital freeing up and will give AMC a lot of movement, right? Could actually trigger a short squeeze in and of itself when you're looking at option activity this high. Let's just break down some of these numbers for us, right? So you've never seen option activity like this. Let's just be honest there. You have never seen option activity like this. So if you look at the puts that are out of the money for March 17th, 901,000. So let's do 901,000 times 100 because each option represents 100 shares. That's $90 million. That's almost 20% of the float in these synthetic, controlled by basically synthetic positions, right? Don't read too far into it. It's only options. It's deviated from it. The value's deviated from AMC. And if you guys have traded options for a while, this all makes sense. But if you have not, just bear with me here. That's 90 million shares that could be controlled by the puts that are out of money. You add 276,000 puts that are currently in the money on top of that, you're going to add another 27.6 million shares. That's a lot. That's well over 20%. That's a lot. Okay, if you take a look at the call side, you got 66,000 calls in the money and 652,000 calls that are out of the money. You can add another 710,000, right, options for the call side, times 100, 71 million shares. Pretty straightforward math we're doing here. So you're looking at over 20% of the whole entire float that could, in theory, be controlled by the options. So imagine how much money is on the line behind these options, how big these short positions are going to be to cause these hedge funds to have to hedge out with so many options. It's going to fuel a move with AMC. Now, let me be honest with you guys. Some days, like what we've seen over the past couple of days, the narrative of this vote is going to go through AMC, Adam Aaron. They're not going to stop this vote. It's going to happen, right? That's the narrative that is taking place over the last couple of days. It will not last forever. Tomorrow, you could have something else come out and the narrative and the sentiment change, and AMC could be up 10% tomorrow, or up 15 or 20% tomorrow. You're going to see a lot of volatility back and forth based off of just sentiment alone in regards to this vote. So it's not set in stone. AMC's not dropping like a rock from here, and in all reality, AMC could have dropped a lot more. Yes, you fell the day before earnings. What is this? 6%. Day of earnings, you fell 8%, and today you fell 7%. I mean, what is that all in all? A little over 20%. You could easily fell more than that in 3 days. There is still hope this vote will not go through, and ultimately, I don't really think it matters, to be honest with you guys. I think the data is what the data is. Short interest, cost of bar rates, all that tells a pretty good story. Now, with that out of the way and a little bit more knowledge behind the option activity, potentially, you know, hedging out some of these massive short positions in AMC, it's going to open the door for some shorts to cover come by March 17th. Now, if we take a look at the FTDs, this is certainly playing a role in this, seeing all of this option activity. For tomorrow, you are going to be looking at about 1.5 million shares that will have to be bought back per the FTDs. And then the next week, right, and this is going to be the option expiration of March 10th. For Monday, you are going to have, let's go ahead and look for Monday, March hold on, March, perfect. You're gonna have 6.8 million FTDs that come due, 5.2 million on Tuesday, on Wednesday 3.5 million, on Thursday 3.6 million, and on Friday of next week 1.5 million. And then the week after that, the week of March 17th, you start at 1.5 million FTDs on Monday, and you go up every single day into Friday, where you have 6.8 million FTDs, right? Wednesday is 3.4 million FTDs, on Thursday is 3.9 million FTDs, and on Friday is 6.8 million FTDs. This will also help to fuel any potential move higher that we get in AMC, and hopefully from this point on you could see how the volatility is most certainly here to stay, and how you will get big moves up or down, and there's a lot of potential opportunity here to make a lot of money. And I personally think the short squeeze is coming sooner rather than later. So if we take a look at the Ortex data, this is probably the last thing we'll cover here in this video. We might look at the technicals here just a little bit, just so everyone is on the same page, how AMC is still in a bullish uptrend. AMC, like I said, still on the threshold securities list, 25.5% short interest of free float, 131.5 million shares that are currently sold short, cost of our average of 277.5%, cost of our max 338%, cost of our minimum of negative 1.13%. If you look at interactive brokers, 1.5 million shares available, 143.66% cost to borrow rates as of Currently, option activity, do you guys even want to look at it? Maybe you do. 6% positive order value on the day. 102 orders totaling $40.26 million. So, as you can see, short interest never been this high. Never been this high, especially when you couple in, 300% cost of bar rates. That is begging for a short squeeze at this point. And like I said in the beginning of this video, AMC has the whole investment community that is essentially watching and waiting to see what happens. When a direction is confirmed, when a short squeeze actually does start, you're going to get a lot of exponential buying pressure that comes in. This is not your Joe Schmo penny stock or short squeeze, right? They don't even see short squeezes like that because not very many people know it's even happening, right? You have to have a scanner, you have to be in a trading forum, right? Everyone knows about AMC. So that sets the stock up for a lot more potential buying pressure too, in my personal opinion. Now, if you take a look at AMC on the charts here, you are above this downtrending line, and this downtrending line, to get to it, would be about $5.30 per share. As the days go on, this line will get lower, so by around March 17th, this line will be at about $4.50 per share. So you're going to have to break under this line at some point over the next couple of weeks to get into a bearish downtrend, and at that point, if it happens, you're going to retest these lows at $3.77 per share, but you can see you are still in a uptrend as long as you are above this line. And even if you do break under this line a little bit, you're still going to be pretty neutral overall, right? Pretty much where we have been trading at over really the whole entire 2023 so far. So you're still in bullish territory, and the fact that you're holding above this line, something that we have not seen since June of 2022, that is very exciting. Now, we have seen a slight reset in some of the technical indicators, like the RSI is at 52.17. That means we're pretty neutral now. You could go up, you could go down. You've kind of muted the bullish rally, but you're not quite in a huge bearish downtrend as far as the relative strength index is concerned. If you take a look at the MACD, that is pretty neutral overall, still slightly bullish, but nothing I would write home about. So, long story short, there's a lot of potential opportunity here. I wouldn't be skewed towards any which way as of right now. I would really have an open mind because you're going to see big moves up or down, but I think the overwhelming data here does support a short squeeze, and that thesis is not going to go away lightly. And just to be honest with you guys, we're not going to know what's going to happen with this March 14th vote definitively until probably July, maybe August at the earliest, in my personal opinion. Now, I do also want to say what I said in the last video. If this vote does come in March 14th with a no, I think that's a set in stone, right? Definitive. It's not going to happen. If the vote is a yes, that's where things get a little bit more complicated and dragged out due to the court proceedings, guys. So that is going to be all for this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Thank you for watching. Most importantly, enjoy the rest of your day, and I will see you in the next one.